Double Shot with your favourite cousins, James and Alex Fitzgerald. Don't want to go to work, don't want to part alone, cause I'm gonna miss you, cuzzy, when you go to Germany. I didn't have enough time to write out the last part, but you're leaving us in a few days. You're going away for 4 weeks?
I am.
3 weeks. You deserve it. You deserve it.
I do deserve it. I do deserve it. I'm going away for 3 weeks, covering off London, Mallorca in Spain, then heading up to Italy. In fact, I've never been to Europe, so everywhere's a new experience for me. And then we finish up in Austria and then Germany before heading back home late in October.
Treat yourself. Like I said, you deserve it. And you know who else deserves a little time off? Producer Nick. So we've got Sammy back with us.
Yes.
Sammy, say hello.
Hello.
He's a bit nervous, but that's all right. That's okay. Because you went to producer Nick's wedding on the weekend.
Yes. He got married on grand final day. Cardinal sin, but
honestly, a cardinal sin.
It was a beautiful, beautiful weekend, beautiful day, afternoon. It was lovely. And having said that, though, we're us suckers in Queensland and the rest of Australia really had to come back to work on Friday. Not you.
Nope, not me.
You got a two-day public holiday, 4-day weekend, and it looks like it was absolutely peachy weather down in Melbourne.
It was a belter and it really sent everybody into a spin. Come Friday, I thought it was Sunday and I'm preparing for the week. I'm going into a bit of panic mode. Yeah, because you've had 2 days off. You know, I've got you nuff-nuffs calling me from the Queensland office. You know, I'm a good girl. I answer. I did. But yes, I am thoroughly rejuvenated. Thanks for not asking.
And I assume no grand final for you this year. Gave it a miss.
No, gave it a miss. I'm doing a course all week and I had to read. I've got 2 folders of 80 hours of reading material. So naturally I got through that in the 4 days off. Okay, I maybe got through three quarters of it.
I reckon 3/4 is a massive overstatement. Hey, I tell you what caught my eye over the weekend. I almost had a double take. Patagonia, one of the great brands. Great brand because not only do they make good stuff, but forever and a day they have absolutely championed the cause of recycling old gear. So they've been a favourite of the environmentalists and anyone who sort of doesn't like waste. Massive company, successful, and the owner is giving it away.
I couldn't believe this quote when I read it, and it's just so great. The owner, he founded the company in 1973, so very well established. Yvonne, where is it here? Yvonne Chouinard, American guy, serial rock climber, very eccentric. He said, I was in Forbes magazine listed as a billionaire, which really, really pissed me off. Basically, just one of those true, like green, it's about the environment. He started with a true purpose. He started Patagonia, and it basically spun out to a serious profit-making business that he's not very happy about. It.
It is one of the great books. If you ever get a chance, download Let My People Go Surfing, which is a autobiography that he wrote about how he founded Patagonia. And it all started off the back of he's a big mountain climber and people would leave the picks that mountain climbers use. They'd leave them in the mountain. Whereas he started the business based off building picks that wouldn't make permanent damage to the landscape.
Wow.
And that you didn't leave in there and you're able to reuse and recycle and all that. And then just build a business from that. Sustainability always at the forefront, very famous for putting in an ad, full page ad in the New York Times Black Friday in the 80s saying, don't buy this jacket. He didn't want people buying more of his clothes because it was contributing to the environment. He wanted them to come in and get them patched up by the company instead.
I mean, when you do a marketing scheme that big and that contrary, do not buy this jacket, and it gets that, it's it's conflicting, right? It's conflicting and it's totally confusing. Anyway, what they've done is they've effectively given away the business by a form of transferring it into a specially designed trust, which is a not-for-profit organisation. This is over in the US. And basically what it's going to do is $100 million approximately per year of its profits will go into combating climate change and also protect undeveloped land around the world. So him and his wife started this basically on those fundamental principles. And now they're at the point where they're like, nah, profits, not about profits. We want to protect the planet. Pretty amazing.
When I grow up, I'm going to be like him.
I know, right? Now, a very funny headline that caught my eye, and we did discuss it. We had a few emails, you, myself, Dad, floating around. Actually, way too many emails for Grand Final weekend. But I had to laugh at this headline. That shrinking feeling. I was like, what?
Shrinking feeling.
Yeah, can you see that there? But it's in relation to the top 100 builders in Australia, specifically the top 20 ranked by housing starts. So these are your Aussie home builders. That shrinking feeling.
Yeah, well,
the
top 100, in terms of the total number of houses that they built in the past 12 months, if you added them all up, it shrunk by 15% in the last 12 months. And it's a bit of a mixed bag. If you look at the top 20, there is roughly 9 in the top 20 that grew their numbers. The other 11 dropped their numbers. And I reckon it's probably one of the few times as a builder over the past 12 months where you'd be thinking, did I want to grow my numbers last year?
100%. 100%. Yeah. Oh, no. Like Metricon, for example, they're still number one. They've been number one for quite some time, biggest home builder in Australia. Last year, they started FY21, they started just over 6,000. FY22, just under 6,000. So, I mean, really, the change is like marginal. What is that? It's like, call it 80 or 90, or maybe 100 builds, so not a whole lot. Then you got number 2, NXT Building, 3, Hutchies, ABN Group, AHB Group. So they're sort of like your top 5. And you're quite right what you said. Some of them maybe 400 less here, 700 more there. ABN Group, 2,000 less. But I agree, they're probably...
What about BGC? Have a look at number 10, BGC. The other West Australian building company dropped from 4,200 to 1,980.
More than 2,000 builds. But can I say though, couple of things at play here, cuz, that we love to talk about on the Doublé shot, the Michael Bublé, the Doublé. Couple of things. Now, they're coming off what I imagine is like the back end of the sugar hit last year from the home builder scheme, which was the $25,000 and the $15,000 grants given out in COVID to stimulate building. So coming off a pretty high base, the year before was probably even higher. And number 2, these guys, they can't start their builds until the land. Whoa, so many repetitives today. The land is readily available. So they are the blocks of land that either are built, they're built by the developers, or they're made available by council for the developers to build. So we got, as we talk about a lot, a supply crisis.
You want to get, and so I reckon you want to get the numbers from your builder. How many builds have they done over the past 5 to 10 years? Most of them should be able to provide it to you. If you're interviewing them, considering different builders, you want to see stability. You don't want to see them jumping up and down like a yo-yo, because that to me shows that they've got a little bit of an unpredictable business. You want stability and predictability, and the best builders build similar number of homes each year. They don't sort of tend to go up and down like a yo-yo.
Fair enough, I reckon. What else did we see in the news? What else was making news? I will say, in contrary to those numbers, crane numbers are up.
His end segmented. Producer Sammy's gone, that wasn't interesting. He's end segmented us.
Mate, so producer Sammy, look, it wasn't our best segue, producer Sammy, but, trigger happy. And you must have pressed like 3 buttons just then. Do we continue? Are we still in segment?
Let's roll with it. Yeah, let's roll with it. Total number of cranes up 7% year on year in Australia. And that was led by Brisbane up 9%, Gold Coast 6%, and Sydney, unbelievable, up 43%. Don't know what's going on in Sydney, but there's way more cranes up.
Oh, do you know what? I think it's all the new metro tunnels they're building. I bet you most of those make up the state government. Ooh, yes. I'm putting it out there.
Hey, you love the headline, that shrinking feeling. I loved this headline as I opened the Courier Mail. I'd love to feel the shrinking
feeling, just like absolutely shredding. You know what I mean? It's like when you wear a hoodie and you go to the infrared sauna, that shrinking feeling, you're just shredding.
You're married now. You don't need to shrink.
Do you know what? I'm almost gone opposite. Summer is coming, firstly. Secondly, I'm almost like, now that I am married, I want to be shredded. You know what I mean? Like, I want to defy the norm. Anywho, I've got about 50 years to do that.
Hey, I love this newspaper article. I've opened up the Courier Mail. Friday, granny flats to the rescue.
You didn't have to open it up. It was front page.
It was front page, granny flats to the rescue. And what it was, big issues in all of Australia today. The vacancy rate in Australia is 0.9%. It is the lowest that it has been since 2006. Queensland, one of the hardest hit, and Brisbane in particular, capital cities, 0.7%. And at the same time, dealing with the fastest rate of interstate migration since 2004. And to put it all in perspective, there is less than 2,500 vacant properties in the whole city of Brisbane today, and the population's growing by as much as 40,000 people per annum. So it's not a lot of housing. As a result, the Queensland State Government have held a summit and said, right, from Friday, if you have a granny flat in southeast Queensland and it is sitting there vacant, you can now rent that out to an unrelated party, which is not what has been happening. All the councils and the state government have different rules, of course, but the general consensus has been that if you've got a granny flat and you rent it out to someone that isn't a family member, that isn't legal. And so they issue breach notices and fines and the like. Not going to be the case going forward in southeast Queensland. They're going to do something similar to what the New South Wales government has been doing for nearly a decade now.
Beautiful.
And that is given as of right, so without the need for an approval, as of right ability to build a granny flat and rent it out to an unrelated party, which is huge, isn't it?
Absolutely huge. And I mean, thank God they've even got granny flats to be able to do this. I'd love to know the numbers on how many granny flats they have readily available. I would guess most of them, because they're like, one bedroom, maybe two if we're lucky. But I also wonder what this is going to mean for people with massive backyards in sort of like that in a 10 to 15 kilometre ring. Is there going to be a point where they're also going to be allowed to build a granny flat as of right to lease it out to an unrelated third party? Bring it back, bring it in. Seems simple.
Well, look, the reality is the people who are most hard done by in a tough rental market are the vulnerable, whether they're single income earners, single moms who've got, lower incomes relative to their expenses, retirees, people who are on welfare. They're generally the hardest hit, and 1 and 2 bedroom granny flat accommodation is pretty much the most affordable type of rental accommodation that you can come up with.
Absolutely.
Generally going to rent for, 150 to, depends on the area obviously, but upwards of $150 per week. So it's affordable, super affordable. And a granny flat's probably going to cost you as a homeowner, maybe let's say on average $100,000. So even if you borrowed the full $100,000 at 4.5% interest, I've done the numbers, it's going to cost you about $90 a week. So more than most granny flats rent for $250 plus per week. You're more than going to cover the cost of the granny flat.
Yes.
But in addition to that, for a homeowner, it's going to significantly have the ability to reduce your mortgage repayments. And for an investor, it's going to give you a very good rental return if you're getting that on top of your existing rent.
Absolutely. So you pay down some home loan and also get the tax deductions on the granny flat.
True, you can appreciate it.
That's right. They're not going to be, massive given it's a relatively small build, but you will have items to depreciate in there because you'll have a kitchen and, like those bits and pieces. Granny granny flats, and I'll say this sort of in closing, they cop shit because they're small. You know, I think your average used to be 60 to 70 square meters, let's say. Average. I might be pulling those numbers from, thin air.
You bang on. Bang on. Most of them are about 70 square meters.
Beautiful.
Yep.
So people say, they're really small, but you're exactly right. They are affordable, and it's different to an apartment where you might have street access, you might have a sound car park, you might even have some of your own garden. Like it is completely different. They are a serious gap in the market. The more I talk about it, the more how can I do this immediately?
Sunnybank.
Yeah.
That little one in Sunnybank on the corner there.
100%.
That could be your go-to.
That was actually the reason I bought it. But anyway, I'll help others.
Old war stories. Old war stories over here.
That's a bit rude.
Everyone is losing their mind about the headlines that are in the papers today about house prices. Are we on the fall? Are we seeing the biggest crash we've ever seen? Is Sydney and Melbourne in the doldrums? Are there actually opportunities still out there? Come on, talk us through it, Alex. What is actually going on if you break it down for people?
Well, sidebar. I had to get clippings out of the newspaper when I joined the company in December 2012. And the headlines were exactly the same. They never change.
Copy-paste job, you reckon?
Oh, the actual copy-paste. Get the scissors out, cut it out of the newspaper and stick it in a scrapbook.
Well, even more so these days because you got clickbait articles online.
Yeah. Absolutely.
Geez, I fell victim to a couple of those over the weekend. But anyway,
so anyway, that was 10 years ago. 10 years fast forward, aka today. Same shit, different day. Same shit, different date. Anyway, a really interesting set of graphs, I should say, were posted. I think it was in The Australian on the weekend, but the source is actually the Reserve Bank of Australia. So wherever it was posted, very interesting graph because it looks at the sort of three tiers, if you like, of the housing market. And they've split it into the most expensive. So when I think of that, I think of the properties on the cliffs in Sydney overlooking the harbour. Yes, they're having a absolute shit of a time, but they're coming off a serious high. I mean, we're talking they nearly hit 40% growth. They were nearly up 40%, and now.
Well, they actually clarify. They say it's the top 25% by value, which in Sydney is anything north of $3.5 million.
Crazy.
Which is, probably the bougie end of the market, I assume.
Oh, it's the bougie end, but also I don't want to confuse the people. We're not just talking about Sydney, but that upper quartile is, what I think of the sexy homes on the rocks. But Melbourne, Queensland, Perth, I'm sure, they're everywhere. So that high end not doing so well, it is down, is negative 12%. It is below the line. The middle end, actually not too bad. Yes, had a pretty good couple of years, but all in all, it's sitting sort of about that 0%. So it's kind of like on the line.
Holding value.
Holding value. That's the best way to put it, cuz thank God you're here. So you haven't lost money, you haven't really gained money, and life continues. Now the lower end of the market, or the affordable end of the market, this is generally sort of like maybe on or below the median house price. Sort of Sydney is probably definitely below the median house price. But here, there's actually still gains in this market. They're up 7%, cuz. So there's actually still, if you believe all of these articles, but you still believe in real estate, maybe you'll look to the lower affordable end of the market to perhaps see where you can get some gains.
Well, and I think it's timely too. I don't know about you, but I've got a lot of friends that are saying, well, I feel like I should make the most of my ability to borrow. If interest rates go up, it obviously makes it harder to borrow. But their question is, well, I don't want to put my money somewhere where I'm going to lose money. I'm probably, I'm not so worried about short-term growth, but where can I sort of find opportunities today? And clearly it is in the affordable end of the market for those who are listening.
That's right. Long-term, cuz long-term always in real estate. There ain't no quick buck.
Hey, really exciting weekend coming up this weekend. We love to follow the auctions around this time of the year. We call it the spring selling season, and it really kicks in after the grand finals.
It does.
So it will start in Melbourne this week. They will, for the first time in 8 months, have more than 1,000 auctions scheduled over a weekend. And it'll be really interesting because we've now gone 4 weeks in a row across Australia with a 60% plus clearance rate, which represents a fairly balanced market. So good sort of split between buyers and sellers. This weekend, though, will be very interesting. Melbourne's come off only 130 auctions on AFL Grand Final weekend.
Smart.
No surprises.
Smart.
But going into 1,000, it will be a monster. So whoever fills in for me next week, I'll be expecting a little update on that little Super Saturday for Melbourne.
All right, fair enough, cuz. Now, moving on to a company that I thought might have been named after you and I, Brickfloor. I'm not sure who's who, but either way, it's good to, keep yourself humble.
I think they called you Brick when you were younger, didn't they?
Why are you speaking in past tense? You still text me and call me Brick. Brick, slingshot, depends on the day. Brickfloor, walk us through this. Who are they? What are they doing?
So basically, they offer a guarantee to anyone who's going to auction. So the way that it works is it's a fairly new company, a startup, but let's say the process runs like this. You've decided you're going to sell. You send them in a little inquiry saying, I'm going to sell my home, this is where I live, etc. This is what it is. They then give you a valuation. Now, it's not a bank valuation or a market valuation, but according to them, it is the value at which they would buy your home off you.
Okay.
You then get to accept their offer, or you can reject it. If you accept it, what you then do is you sign an agreement with them where basically they guarantee the floor price of your auction campaign. So let's say you wanted to sell your home for $1.5 million.
Yes.
And I was at Brickfloor and I said, yeah, I'll pay you $1.5 million. You then decide to go to auction. What you do though is you pay me a fee. So I get a fee from you, which is a percentage of the price, and I could not for life or money find out what the percentage is. But I say, right, I'll charge you a percent. You then go to auction. If the price doesn't go above the $1.5 million that I've offered, then I buy your home as Brickfloor. If, however, the price goes above the $1.5 million, you still have to pay the fee to Brickfloor, but you've obviously gone in with a lot of certainty. You've got a great outcome. So basically, it's like an insurance on the price that you'll achieve out of a auction campaign.
It's an interesting one because do you make it your reserve or do you go a little bit more conservative?
Well, I reckon you would make it the price and then add on whatever their fee is, and that's probably your reserve.
The little secret fine printer.
Yeah, so Brickfloor, interesting concept for anyone who is thinking of auctioning, maybe worth investigating. I'm not sure, that they're going to offer you the best deal. They're in it to make a buck like every other company out there, no doubt.
Wonder if they use scare tactics.
Well, I reckon it's got a really good place for older retirees who just want a little bit of certainty. They've got bucket loads of equity anyway in their home, and they're sort of probably not wanting the anxiety attached to an auction campaign. Good business idea.
It's not bad. James, speaking of exiting this podcast, I heard you saw a little graphy graph on investors exiting the market.
Yes, and look, we've been spoilt this week, might I say. The newspapers, well done to you guys. You've actually come out with some good stuff this week. Sometimes it is a little bit hard putting together a run sheet on my own for this podcast, but this week a slightly easier task. Really interesting data, and it came out of the REA realestate.com group, and what it was talking about is the percentage of homes that are sold every year that are sold by investors. So what percentage of every home that sells was an investment property? And it's really interesting because the number has increased from 7 or 8% in 2014 to now more than 25% of every home sold in the last 12 months was an investment property. So more investors selling, which in a normal situation, if they're selling to other investors, probably wouldn't be a big deal. But what's happening is they're selling to owner-occupiers because at the same time, the percentage of homes sold by investors has quadrupled. The percentage of homes bought by investors has more than halved. So the percentage of homes bought by investors in 2014 was up around 25%. It's now down to 7 to 8%. So we're seeing an enormous amount of investment properties that are being converted to owner-occupier properties, which is contributing to the rental issue that we're seeing today, because there's a lot of properties that were rental properties that no longer are because they're being transferred across.
So you're saying we can't give the councils all the flack for not bringing on the supply?
We cannot.
Who do we give the flack to on this one?
Some of it's just market forces.
And it's probably back to the RBA. They've brought interest, or they had brought interest rates down. It was perhaps affordable for people to buy that it wasn't for previously.
Well, it does also explain why, for the first time in, I think, 7 censuses, we actually saw the rate of home ownership increase in Australia between censuses. So there was about a 0.5% increase in the amount or percentage of Australians who actually own their home. So this speaks to that trend. Doesn't obviously help matters for renters out there because it is certainly contributing to the rental crisis.
Wrap it up.
What do you reckon? Wrap it up?
Wrap it up. Yeah,
feel like we gave good value in today's podcast. I hope you felt that as a listener.
I'm just glad James said we.
Yeah, you did a good job reading it. In fact, I'll let listeners in on a little tidbit before we do wrap up. I'm explaining this upcoming segment to Alex, talking about the graph, and she goes, but does this actually confirm that we're seeing that trend? And I was like, yeah, that's exactly what this graph shows us, actually.
Well, correction on the papers, on the board papers, Your Honour. I realised what I was saying as I said it. And you know what? What's important in life? Self-correction.
What's also important is a little break, a little bit of you time every now and then. And that's what I'm going to do. I'm going to leave the podcast in your capable hands for the next few weeks. I'll be tuning in every now and then when I'm on maybe a bus ride or something over Europe. Don't let me down. And just whatever you do, please tell Mitch, speak into the microphone if he's the one filling in.
Fair enough. If you guys want us, you will find us. Both of our emails are in the show notes, but you can find us on social media, all of this jazz, whatever. You'll find us. Hey, leave us a review because some of you've been listening for a while. We see you and you don't leave reviews. So, preferably a nice one. Anyway.
James, Dan Milkshake Man, you suck.
Guten Tag.
Guten Tag.
Guten Tag, ja. Thanks for listening to another episode of The Double Shot with your favourite cousins, Alex and James Fitzgerald. If you've got a burning question or something we absolutely need to talk about on the pod, please write to us. Both of our emails are in the show notes. For little real estate tidbits and a little bit of banter, a lot of banter, you can follow us on the gram. Our handle is thedoubleshot.podcast. That, my friends, is thedoubleshot.podcast. Until next time, think of us when you sit back and sip your next double shot.